When you are swing trading, your results depend on the market conditions. In good market conditions, swings of 3 to 5 days work very well. If the market conditions deteriorate, then swings to the short side work. And then there are choppy conditions where you can get chopped in terms of both long side, short side don't work. And typically, this can lead to what is called as a death by 1,000 cuts. So understanding what kind of a market conditions are there is a very important thing which I realized after trading for 2 to 3 years, where I had a variability in my results in terms of taking up the account, giving back, because I was not very cognizant of the market conditions in which I was trading. So I decided to develop a framework called Situational Awareness for trading. Situational awareness is a US Air Force driven way of thinking. This particular word, situational awareness, is very common in the aviation industry. So in the aviation industry, before any flight, they are looking at what is the situation going to be during the flight. What is going to be the situation during the duration of the flight? What conditions are going to be? What is going to be the wind? What are going to be the landing condition? Is there going to be a fog? Do we need to carry more fuel? In case we have to have an emergency landing, what are the alternative airports? So that all is part of what is called as a situational awareness framework. Now this situational awareness framework was developed by the US Air Force during the Vietnam War, when they were losing a lot of planes. And when they were losing a lot of planes, they found that they were losing a lot of planes not because of technical faults in the plane, but because the pilot was losing awareness about his environment and they were getting shot down or they were going down. So the US Air Force has a methodology called OODA network. OODA network is basically, it's a loop in terms of thinking. So the OODA network or the loop starts with observe. So you observe what kind of conditions are around you and how you can basically what changes are required based on the observation. If you see the market conditions are choppy, then you might decide not to trade certain kind of setups, and you might decide to take your profit quickly, or you might decide to go down on a lower time frame, right? Then orient. So once you read the market conditions, or when a pilot reads the conditions, they orient their plane accordingly. And then once you orient, or you orient and then you decide, and then once you do act on that, there is again observation. Look, I made these changes in my trading. Did it really help? Not help? I didn't buy breakouts, but actually breakouts ended up working. So now I need to change my approach. So this OODA network is a good framework for thinking. And what I do is, for trading, I'm trying to look at what kind of market conditions are we trading in. Are current market conditions conducive to aggressive risk taking? Or I need to focus more on risk management or reducing my risk. How much exposure do I want to the market? Do I want to go with margin, or do I want to not have a margin? All these are questions which are determined by my situational awareness. Whether to increase risk, to reduce risk, what kind of setups work best in what condition, and then focusing on those setups. This is all part of a daily routine, because I'm a short-term trader, typically holding positions from anywhere between 1 to 5 days kind of a thing, occasionally longer duration if they have a catalyst. But bulk of the trades which I do is short-term, and short-term trades are very vulnerable. So every day morning, I have a series of questions which I ask, and based on the answer to the series of questions is what will determine what will I be doing on the trading day. So these questions which I am asking are basically very simple question, right? And basically, are breakout likely to work for next 3 to 5 days? If the answer to this question can be clearly articulated, if I think that okay, breakouts are likely to work for next 3 to 5 days, then I'm going to go and start buying breakouts, or aggressively go and look for breakouts in the first few minutes as soon as the market opens, or during the entire day. Are breakdowns likely to work? Because when you are shorting, and if the period is not conducive to shorting, if you short, even if it has a catalyst, the stock will just sit there, or they will not have a follow through. And you will see this very clearly on many trades, right? And basically, so these are the two questions which determine the when I ask this question, the answer may be yes. Are breakouts likely to work? Yes. Or the answer may be maybe. So if it is maybe, that means you have to be very selective, right? And if the answer is no, I'm not going to be even trying to buy a breakout. This allows you to then, because just because you run a scan, there are always breakout ideas, right? And when you start running a scan, you can get tempted. Like if you sit in front of a scan and run a scan and lose the overall market awareness, you can go and end up buying the breakout. And then what happens is, if the market conditions are not conducive to breakouts working, then the breakout fails, or the same day the breakout will fade, and then you get super frustrated. So in order to avoid this frustration, I am looking at this series of questions, right? Now, once I do this first thing in the morning, so by 8 o'clock, I have my situational awareness clear as to whether I am going to be, whether breakouts are likely to work or not likely to work. If breakouts are likely to work, then I will be trying to get in early in a breakout as early as possible. Breakouts are likely not work, then I will be more cautious. I will only focus on certain kind of breakouts with a catalyst and things like that, right? So let's, so how does this question, but what information do I have to answer this question, are breakout likely to work? Because you have to answer the question based on information, not just on gut feel, right? And basically, so what input goes into answering this question? Are breakout likely to work, or are breakdown likely to work, or what kind of setup is likely to work? And those are inputs which I use, and those inputs are own trading. So I am a short-term trader. I do swing trading. So if I see 3 trades in a row not working, that itself is a information that tells me that something has changed. Like, and I'll give you an example, like till around 3 days ago, shorts were working very well in this market, right? And if you took a short, it was likely to have a follow through. They were like a delayed reaction shorts on stocks which had missed earnings. They were working very well. And then something happened, and I was short, and all my 3 shorts got stopped out. That itself was information for me to tell that something had changed in the environment, and I should not be shorting aggressively now, right? And obviously the market had a big buying which came in. There was a breadth which was there. That was another thing. So that's one. The second tool which I use, which I have developed in recent years, is 20% study. 20% study is just a simple study of stocks which have gone up 20% in the last 5 days. So I every day look at stocks which have gone up 20% plus. So this is a stock which has gone up 20% plus on 100,000 volume and priced above $5, right? I don't look at stocks which are priced below. And then I see the number of stocks which are showing up in this particular scan. If you see currently, right, you have like these many number of stocks which are showing up in your study, right? And there is a negative side to this, or flip side to this, which is how many stocks are down 20% plus, right? And so you will see that there are less than 20 stocks, like or around 16 or 17, 18, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 18 stocks, which are like down, right? And then this information is very useful, because this information gives you a lot of information about the underlying momentum in the market. Now, I also have a plot of this done on the market. So this is just plotting the 20% plus move up and down on a plot, right? And then this is down moves, right? Now, when you look at this over a longer term, and if you study this, you will see that it spikes from time to time, right? It spikes to a very high level. It spikes to levels above 100. It goes to a levels where it goes to 100 or 200 or 170 or 150. And you will see that whenever this spikes to a high level, that is followed by corrections in the market. Now this spiked to a very high level, and within the next 3 to 5 days, there was a pullback. So short-term pullbacks are very likely within 3 to 5 days of spikes above 100, and especially above 150. right? Whenever you get these big spikes, right, and means momentum or the breadth is very high, or large number of stocks are making 20% study, 20% move, that is not a positive for the market. That means like there is almost a blowout kind of buying which is happening, and invariably it leads to, in next 3 to 5 days, a small pullback or sometimes a major pullback in the market. Now, if this information is available to you and you are daily monitoring this information, the moment the reading starts going above 100 or they start approaching 120, 150, right, that's also a good time to trade, because everything will be working and breakouts will be working like crazy. But then suddenly everything stops because the market just like buying exhaust at that kind of a level, kind of a thing. Using situational awareness as an overall filter on your trading helps in being in tune with the market. In order to do that, here are some ways in which you can fine tune your situational awareness. One is your own trading. If you are a breakout trader and you see 3 trades in a row has not worked, and if you're a good trader and you've been using this method, then there is a feedback which is telling you that this kind of a setup is not really working, right? And that itself should be a caution sign for you. Similarly, if you're a pullback trader and you see pullbacks not working, that means there is something in the environment which you should be immediately tapping into. The other thing is the 20% study, which is basically looking at the number of stocks which have made 20% move in last 5 days. It acts like an oscillator. So when the study is low, or when the number of stocks which are up 20% in 5 days is below 20, that is extremely bullish, because that tends to lead to deep buyers coming in, and as a result of that you get a turn in the market, or you get breakouts working. The breakouts which start near the low, when the study is low, tend to work better. Now when the study goes extreme, it is also an information, because when the study goes extreme, that means a lot of breakouts have been working, and that tends to lead to a pullback in the market. So when you get extreme readings about 100, 120, 150, sometimes about 200, then that tells you that this is a peak momentum, and in the peak momentum, very soon you're likely to get a pullback. So it's not immediately same day you're going to get a pullback, but it is within 2 to 3 days. And this is something which you can confirm yourself by going into history and seeing the 20% study and seeing what happened when the readings were high. The third thing which helps you a lot is looking at what kind of stocks are showing up in the 20% study. These are the stocks which in the last 5 days have gone up 20%. When you start looking at it, you will see whether the stocks which are making 20% move in the last 1 week are the one which were near high, or which are near the low, or which are like continuation move. What kind of moves are happening? And this is a useful information. What happened last this week, is suddenly stocks near 52-week low started making 20% move. So it showed that there was a rotation happening, and at the same time you could see stocks near high starting to exhibit distribution. So this information quickly helps you in adjusting where to focus on, what kind of setups to focus on. The other thing which you see is what kind of themes are showing up in this 20% study. How to be on top of the theme, you will know, like some couple of months ago, suddenly all these stocks related to Bitcoin treasury started showing up in 20% study, or the eVTOL, or the stocks like Joby and all started showing up a couple of months ago or a couple of weeks ago. All the stocks which are related to vertical takeoff, they were showing. So themes can be quickly identified using this. The other use of this particular kind of an approach is when you sort the 20% study by sectors, you are going to find that most of the time it is dominated by stocks from technology, biotechnology, healthcare field, which tells you that you should be focusing, if you want to make money, short-term trading on technology and biotechnology stock. The other information which you see also in the study is what capitalization stocks are dominating the action. When you see larger capitalization stocks dominating, that tends to be near the bottom, while as the market moves away and market becomes more and more frothy, you will see lower and lower capitalization stocks starting to make moves. So there is a lot of information which you can gain from looking at this 20% study and use that to adjust tactically what kind of a setup you are going to be focusing on, what kind of things you are going to be focusing on. Like in the last 1 week, a lot of shorts started working if you took the shorts near the high, because the stocks which are extended started to correct. Now this is an information which you can gain and then adjust every day your flight path. So situational awareness for short-term traders is an overall filter which will help you in becoming good at understanding the environment and then adjusting your tactics. Before I developed this entire approach to situational awareness, many times when I used to be like taking up my account up and ended up giving up the gains because I was not cognizant that the market situation had changed and I was still trading the same way. So just ask yourself this simple question every day. Are breakouts likely to work? Are breakdowns likely to work? What themes are working? What capitalization is working? And once you do that, what will happen is you will be on top of the situation.